Aditya Infotech IPO. This IPO got blockbuster subscription. The current GMP is also suggesting a strong listing gain. If you are one of those investors who has got an allotment and wondering whether to sell it or hold it, this video is for you. In this video, I am going to talk about those important details which will help you to decide on whether to sell it or hold it. If you are new to this channel, I am Harshi Shetty, AMFI registered mutual fund distributor, investment mentor, coach, and founder of investor community, the Investor Club. I personally invite you to join my Investor Club and take full benefits of it for free. Links are given in the description and pinned comment. Follow it and join my investor community. Before we begin, subscribe to my channel for more financial related contents which will help you to make informed decisions and strategies. Aditya Infotech is leading Indian brand in CCTV security. It has a large presence in India and across the world. Here is a very quick snapshot of the financials. Aditya Infotech's financials and valuations are at very great space. All the financial figures are at very good zone, which is why the GMP is showing a very strong base in the grey market. So how did the anchor investors invest in this IPO? Most of the prominent anchor investors invested in the IPO. Total of 582 crores has been invested in this particular IPO. Some of the strong anchor investors are Government of Singapore, Abu Dhabi Investment Authority, SBI Mutual Fund, HDFC Mutual Fund, and many more mutual funds of India. This strong confidence from anchor investors has boosted the confidence of retail investors and institutional investors. This also demonstrates the confidence in this IPO. What is the GMP status of this IPO? Current GMP is at 300 rupees per share, which underlines good valuation left for all its investors. GMP has been very stable since the opening of this IPO. So let's talk about some of its strengths and key risks which will help us to decide whether to sell or to hold. So let's talk about key strengths. CP Plus is a strong brand in India and across the world. The financial growth has been good and positive. It has cutting edge manufacturing. It is one of the largest in India and stands number 3 worldwide. This company is a big beneficiary of Make in India initiative. It is leveraging every possible benefits of this Make in India initiative. It has a very good and balanced distribution network across India and worldwide. It is having a very reasonably low valuation at current issue price. The current PE ratio is standing at 22 times when compared to the sector peer. If these are all the strengths of this company, what are the key risks coming with this company? Concentrated product line. 79% of the revenue is coming from the top 4 products of this company. Any disruption in any of the products which will bring down the revenue substantially. It has a over dependency on the suppliers. 95% of the raw materials are dependent on the top 5 suppliers across the world, one of which is China. And much more importantly, it has a strong competition base across the world. Multinational companies and local players are competing so hard that it will bring up a price war between the companies, bringing down the margins. Valuation post listing, if it sustains the GMP and lists at that price, will be very high. This will make this company very highly valued and this may start a price correction soon. So here is the most important topic of this video: listing day strategy. Here is my personal listing day strategy. I invested in this IPO only for listing gains. If this IPO is going to list anywhere above 35% listing gains, I am going to offload all my stakes and book the profits. Then invest that profit money in mutual fund. You can either follow this or you can offload 50% of your stakes and trail rest of the 50% as per your profit expectation. If in case this IPO lists anywhere between 15 to 25% listing gains, which looks very lower than the current GMP levels, then you can trail the profits, keeping stop loss 5% below the listing price and trail the profits till you get your expected profit. If you are a long-term investor who is thinking to invest for a longer term, it is better to focus on its fundamentals and quarterly results. If the IPO is going to list more than 40%, then the valuation is expensive and most of the shares may see profit booking and the price correction could happen. Here are some of the risk mitigation tips out of my experience. Never invest a major chunk of your net worth in IPO and never expect a guaranteed returns only dependent on the GMP. In this global volatile market, it is very important to understand the valuations. In this IPO, the valuations are very attractive, which is better case for us. Never invest in FOMO. FOMO is never a strategy. Finally, keep these things in your mind. If you had invested only for listing gain, go ahead, never think about anything else. Invest your money wisely in mutual funds. If you had missed the allotment, it is not a wise decision to invest post listing because it is most likely that valuation is at higher side. For longer term, review the business, follow the quarterly results, look at the fundamentals, how it goes along. If you are finding any difficulties investing in your profit amounts in mutual funds, follow my investor community where you get real-time updates on the market dip opportunity, where you can invest exactly on those sectors which is going to help you in a long run. Link given in the description and the comment section. Follow the link and join my investor community. Subscribe to my channel. If you find this video helpful, give me a like, subscribe to my channel, share this video with someone who has got the allotment and wondering what to do with this IPO. Until I bring the next video on listing gain strategy, take care, have a nice day. Thank you for watching.